Hello, everyone. Welcome. My name is Bernie, and this is a case for U.S. Treasuries. Now, it's hardly the case where we can find something in the market that is so devalued to a point to where it makes sense to at least consider. Now, I've been following the U.S. Treasuries, particularly this ETF called TLT and EDV. Now, these two treasuries are the longer term treasuries. This is a 20 plus years, and EDV is a 20 to 30 year treasury. Lately, the Fed has been dropping its rates. It was at 5.33, I believe. There we go, 5.33, and it's gone down to 4.83. Now, if this trend continues, it's going to be pushing these ETFs a little bit higher. So far, they've been falling significantly since 2020, where TLT was at $120, $170, I'm sorry, 170.84, and EDV was at $175.91, all the way down to where they are now, where TLT is at 90.47 and EDV is at 91.2. So they've fallen quite a lot. But what I like about these ETFs is their payouts. They pay consistently. This one pays monthly. And right now the payout is around zero point 0.3 cents per share. And if we use a calculator at 0.3 multiplied times 12 months divided by, what was it at, 91, 90.49, 90.49, and when you multiply that times 100 to get the percentage, this is the actual percentage rate of return as it stands. And if we look at EDV, which is also a nice payer, every now and then, because when they sell their bonds, there's a slight difference in what they get them for. So then they pass those down to us, because EDV, they strip away the payments. That's why it pays quarterly, because TLT pays monthly because it has these coupons inside of it. And with EDV, these are treasuries that have those coupons stripped away. So these payments equal what the buyers of the bonds get them for. And the difference is the difference in what they buy them for and what they can sell them for. That's where these payments come from. So they're ending their term, and they get them a little bit cheaper, pass these payments on to us, which is pretty nice. That's why it pays higher, but it's not because of the coupons. It's because of the value of the bonds themselves. At least that's how I understand it. So if we take the payout now, the quarterly payout, which is 77 cents, so we're going to take that 0.77, multiply that times the 4 quarters, divide that by the $71.30 of the share, and get the percentage rate. So it's a 4.3%. So altogether, between both of them, we get a little bit over 4%, which is not bad. So my theory is I loaded up on these because compared to the market, they're very low. Actually, if we take a look at TLT, which is the longer running ETF, it was hitting its 20-year all-time low from 2004, which it was at $81.32, and here recently in October 23, it hit at 84. So actually a little lower than that, but I can't quite get to it right now. Let's see. 84. There we go. So it's touching its all-time lows, 20-year lows, and it hit some resistance. So both of these ETFs are kind of behaving very similarly, where they're reaching their all-time lows, hitting resistance, their payout, their dividend payout, if you will, it's becoming a very interesting proposition for investors, and they're being propped, or at least it's found its floor. So the way I figure, okay, it's up 15% since then. Maybe this is the floor. Maybe it won't go too much more than that, at least downward. So it gives me a little downward protection. Sorry about that. So what I'm doing now is basically loading up on them. This is my retirement account. In between both of them, this will be my yearly income estimated. It's about $4,000. I have a little bit over $100,000 in my retirement account now. So I'm hoping to be able to take this money, and if they continue to go down, I'm just going to build up on the position. If they go up and it gets a little bit expensive, where the payout ratio the yield starts to become a little bit lower, then I'll just invest in something else that looks like it's a little bit on the finding a floor as well. So that's what I'm hoping to do, and I'm trying to hold them for the long term. So this is the plan, guys. We will see what actually ends up happening. Well, thanks for joining me today, and stay tuned for the updates. Goodbye.